So as an accountant, I get to dive into the books of many different businesses, from SMEs to large global companies. A lot of them know something that you probably don't, and that's the key difference between profits and cash flow. It's very possible to run a highly profitable business on paper, yet still run into cash flow issues. In this video, I'm just going to dive into what that difference is between profit and cash flow, what some of the key culprits are of a low cash flow business, and some tips to help you try and fix that. So what actually is profit? I'm sure you're aware that profit is simply your income or your revenue less all your expenses. You would be right. But in the accounting world, we have something called the accruals basis, where you recognize revenue as is earned and you recognize expenses as they are incurred. I'll just give you a quick example of this. Let's say you're a solopreneur, a freelance video editor, and you edit videos for big YouTubers. Clearly not me, big up my 70 subscribers. Let's say one of your clients is a large fitness influencer who is currently living life in Ibiza, living the high life and having fun. Let's just say it's April and you have currently edited a few videos for this YouTuber and sent your invoice. The YouTuber, being busy partying and living it up in Ibiza, hasn't actually seen your invoice come through and doesn't get round to paying you until the end of May. So 1 month difference. Well, in accounting terms, you've effectively earned the income already and can recognize the sale in April, but you haven't actually received the cash yet. So cash from this transaction is not going to be received until May. You can clearly see the difference between the profit and the cash flow. When that cash is actually paid, then obviously it's going to increase the bank account and the transaction will then be settled there. So as you can see, we could get into some trouble here because we may be recognizing plenty of income through invoicing our clients and fulfilling the work. But if they haven't paid, then effectively you don't have that cash yet. You've recognized the profit, you've recognized the revenue, but you don't actually have the cash to show for it. Now, obviously, this may cause some issues. Let's just dive into some of the biggest culprits of this. Obviously, the big one is slow and late payments. Maybe you've billed £5,000 in a month, but you haven't actually received that cash. Maybe you don't know when you were going to actually receive that cash. I've seen customers take anywhere from 30 days all the way up to 90 days. Even though you've earned that money in a certain month, you may not receive the cash for a long while. So you need to be very careful as to what you are going to be spending whilst you're in that buffer zone of not actually having the cash on hand. And secondly, big annual expenses. A lot of business owners pay for things like rent or insurance, and perhaps you pay this upfront in advance or as one big payment at the end of the year. Here's another area where you might get a little bit in trouble if you don't manage your cash properly, because what could happen is if you don't have the cash from invoices that you have been sending over the last month or two, and you have a large payment coming up to be made to a supplier, perhaps you may struggle to make that payment if you don't have that cash. Knowing when these payments are going to occur is vital in ensuring you have enough cash on hand to cover these big expenses. The third big culprit is overhead creep, which is effectively when your recurring expenses, so software or rents, just general bills, may be going up every single month or every year, and you don't even realize it. So the cash could slowly start coming out at a slightly higher rate. May not have enough cash on hand to effectively ensure that you don't run into any issues later down the line. Now we've covered some of the culprits of what having a lack of cash does. Let's dive into some of the things you can do to ensure your cash flow is sufficient and while running in your business. My first tip is to ensure you get paid upfront or take a deposit if you can. When I was running my freelance and agency business, I would always ensure that I either got paid upfront or I took a deposit of about 50% upfront for the services. So going back to our freelance video editor example, let's say they're charging £2,000 for a couple of video edits for the month. It would be better off if they were to either one, invoice in advance and get paid before they actually done the work so that they have certainty over the cash and they know that it's there, or to take a deposit of around 50% upfront and then the remaining balance after completion of the work. So this is probably the best tip when it comes to navigating your cash flow and ensuring that you have enough cash on hand to continue to pay your expenses as well as yourself. My next tip is to utilize direct debits. Now, this is something I loved doing back when I was running my business. I'd set up on a platform called Go Cardless, and every single client I onboarded, if they weren't just a one-off fee, I would effectively set them up on a direct debit, a monthly retainer, and it would just invoice them and bill them automatically. Rather than actually having to go and send a manual invoice to the client and say, look, can you pay this bill for me? It would just do it automatically. And that gave me a lot of certainty because I knew over the space of the contract, I was going to get paid this amount on this day every single month. It really eliminated a lot of the fear around not getting paid on time. So if you can implement this, I would strongly recommend doing so. Now, the last thing you can do is to just set yourself up a basic cash flow forecast and just start tracking it. Having a good idea of when you are going to get paid, who's going to pay you, when they said they're going to pay you, and if they are late on their payment is going to help so much when it comes to navigating cash flow and making sure that you can stay on top of any shortfalls in a month. So just having this bird's eye view is going to be great for you in business. A lot of bookkeeping software like QuickBooks and Xero is going to allow you to do this automatically just by having a supplier linked to the platform and show you the invoices you've sent and when any are overdue. So if you are using a platform, I strongly recommend setting that up and making sure that you check that on a regular basis. I hope that video helped you understand the difference between profit and cash flow. If you did find it useful, be sure to subscribe to the channel because I'm going to be dropping a lot more content when it comes to this topic. I'll see you in the next video.